What's up, everybody? Welcome to another edition of the Free Toaster News Pod. I am Carlos Caro, your host. I'm here with Nick Madrid, our co-founder. And before we get into this week's story, I want to pause and thank our sponsors, Spinwheel, Fintel Connect, and Bulldog Media Group. Nick, this week we covered a number of stories, but the one we're going to cover this week is Upgrade's launch of the Boost Money product. This actually happened in November, and Upgrade's VP John Doppke was kind enough to join us for today's episode. He's been leading the initiative over at Upgrade. John, welcome to the show. It's good to see you.
Carlos, thanks so much for having me. I'm excited to talk about Boost Money.
I was looking at the website for the product, and I couldn't help but get the secured card vibe out of my mind. I saw the credit card dimension, I saw the deposit product dimension, and I also saw there's kind of like a fee tier and a no fee tier. But I just wanted to get your take. Can you just walk us through those two product constructs?
Yeah, absolutely. So, the way I generally describe Boost Money is it's that an all-in-one financial account. It's designed for, people who may need things like cash advance and want to be building credit. It's got four components in it. One is a checking account. One is, exactly as you said, a credit building secured card. Third is there's an optional high yield savings account. And finally, access to interest-free cash advances. So those are the four components. You can get all of those for free. So we have a free tier that gets you all those four components. Now we do offer what we call Boost Money Premium. That's a premium tier for $9.99 a month. And that unlocks a number of benefits across all of those different components. So on the savings, for example, if you're a premium member, you get 10% APY on your first $1,000 in savings, followed by a 3.05% APY above that, which is already pretty elevated. Second, you get free express delivery of your cash advance funds, as well as a fast track to getting larger cash advance amounts faster. You also get a number of protections on the card. These are kinds of protections you typically see on more premium cards, things like purchase protections, trip protections, ID theft as well. And finally, VIP customer service. So once you sign up for premium, you get all those benefits. The maybe to get a little bit into the spirit of why we put this all together, what we are seeing is that this is a kind of customer who has a number of different needs. And especially this is a type of customer that's been increasingly common for decades in the US, people whose income has become more variable during the year. Like a lot of jobs have been switched from, salaried to hourly jobs. And so that means that people have a couple of colleagues, depending on your cultural reference, either the Charles Dickens or the Led Zeppelin reference of good times and bad times. So, people have good times and they have bad times during the year. Increasingly, that 10% APY is perfect for when you've got good times. You've got a little bit of money you want to sock away. That 0% cash advance, that's when you've got tougher times, when you're trying to get to that next paycheck. And again, that's a pattern that's increasingly common, not just for low income folks, but even moderate income folks. There's much greater volatility in income and expenses than there have been in decades past.
Gotcha. We had a little sidebar yesterday, and you mentioned something that caught my attention around just the brand strategy. Can you comment a little bit on that?
The brand strategy of Boost Money?
Yeah.
Yeah. So, the type of customer we're going for is in fact a type of customer we've already been acquiring with our mobile banking offerings, with our rewards checking product. Rewards checking has appealed to a pretty broad array of customers, some of whom are, are really well suited for something like a personal loan or our upgrade card, for example. But we were finding that there were some customers who were really looking for more short-term needs. And so this offering is really crafted for them. Because that's a sort of a different customer set, it's sort of useful for us to have Boost Money as its own brand. As I mentioned then, like, we're not trying to be clever or coy or anything. This is clearly an upgrade offering, but we actually did create a microsite called boostmoney.com that allows us to have a really focused message for Boost Money that doesn't get a little too tangled up with some of the other products. As you know, we offer a pretty wide array of credit products from PL, card, home improvement, auto, and so on. And so it was very useful for us to be able to distinguish this message from that one. We also have even launched a separate mobile app, a Boost Money mobile app that performs a lot of the same functions as our existing app, but again, is really more targeted and tailored for this audience.
Got it. I'd always associated your brand more prime, kind of upmarket, higher credit limits, that sort of thing. I'm kind of viewing this as an attempt across your brand to serve customers across all levels of their financial journey. Is that the motivation here, or is that part of it?
To some extent, I would characterize our brand overall as being pretty middle of the road. If I look at the customers we approve for our credit products, there is definitely prime, but there's plenty of near prime as well. And so that's something that, and it's a useful segment to target just because it's so broad, right? It obviously gives us a lot of folks we can address. Certainly with Boost Money, we are approving folks maybe with lower credit scores than we might approve for other things. However, when it comes to like looking at income ranges, that mapping isn't as clean as you might think. Like there's still plenty of people who are making decent money who still have times when they're, when things are just tight, that those gaps between income and expenses have just become increasingly common. So in fact, the Boost Money kind of segment is broader even really than I initially expected. So it does allow us to serve some customers we weren't serving as much, with our credit products. And we do hope for this to be kind of an on-ramp into some of our other credit products for them as they improve their credit. But at the same time, like I said, some of the needs, especially if I look at cash advance, that's a pretty broad need that actually is useful to a lot of people from time to time.
And I would love to unpack that, John. So, I'm one of the nerds that reads terms of service. And so if I have this right, there's the bundle that you get for free. And part of that bundle, you connect your bank account so you have visibility into that direct deposit that's happening. That unlocks a certain amount of instant cash or sorry, I'm going to use the right terminology of cash advance, not instant cash. It's a little bit different, of cash advance. And then if you move your DDA over, you move your direct deposit over, then you might unlock a different level. But still, at the end of the day, if I'm understanding this right, you're using cash flows or that direct deposit as an underwriting criteria for these cash advances. Can you expand any bit on that before?
Yeah, absolutely. So you've got the idea, right? I mean, we're definitely using cash flow analysis as a basis for our underwriting. When we initially launched Cash Advance, we actually launched Cash Advance before Boost Money, a little silently, just for our current users, folks who already had direct deposit with us. Just because, like, if somebody gets the bank accounts we offer through our partner Cross River Bank, if somebody has one of those accounts, we get really good visibility into the transactions and the timing of that. And so that's where we started. We launched the ability to connect an external bank account more recently than that. And as you can imagine, that's where users are often starting, just because, switching direct deposit is obviously very disruptive for a user's life. But yeah, we can now connect via Plaid, and this is pretty standard for other providers of cash advance, and look at, find the patterns of direct deposit and so on and base it on that. It is true that if the user is willing to switch direct deposit to us, they get a little bit more headroom. But in fact, we expect to see a lot of folks kind of start out with an external bank account, and then the transition over to direct deposit to us will probably take a little longer. And that's just fine.
John, earlier you were talking about the kind of the bundled nature of the offering. You have a deposit side, you have a cash advance, you have a card. I'm putting my marketer hat on here, and I've always found it challenging to communicate these kinds of bundled offerings to consumers. How do you guys think about what you lead with? Like, what's the hook that gets the customer in the door, or maybe another side of that question would be, is that not even an issue because you already have an existing distribution for your other products, and this becomes part of your downsell potentially for someone that couldn't qualify for something else?
So both of those things are true that you just said. I think right now, a lot of the marketing we're starting with, and by the way, I guess I will say this is something I expect us to learn our way into, right? I'll tell you kind of what some of the things we're doing now, and in a year it may look very different. Right now, a lot of our marketing is focusing on the cash advance, just because we have found that, like, from a marketing perspective, that's been very effective. However, even like to be able to back up the cash advance message with the 10% APY has also proven to be really powerful. That 10% APY has really been a useful hook to get people to take notice. It helps us stand out above what is otherwise already a pretty crowded marketplace. So I think that's useful. I think we do plan to do some advertising also around credit building, and to see, okay, who do we pull in for that? How effective is it? But also, is a different kind of customer base. I think it'll be pretty similar customer base, but their initial usage might be a little different if they're more interested in the credit building side. So again, I think that's something we expect to learn our way into. We have, as I mentioned, been acquiring customers like this just with rewards checking as it is, but that's been a pretty undifferentiated bank account. I mean, obviously the rewards are appealing to folks, but otherwise, like that too is a crowded space. I think it's a little harder to stand out there. And if we're competing with the likes of, Chase and Citi and Bank of America and so on, it's hard to stand out relative to them. And they've obviously got very large advertising budgets. In the cash advance space, we're finding like especially with the 10% APY, that's a pretty big wow factor. But yeah, like I said, we'll see.
I was fascinated by this, and really, this is in the spirit of trying to understand this better, because there's many stats out there, and I tried to pull a recent one from the Fed where call it half of Americans they don't have $500 or $1,000 saved up for an unplanned expense. And so I really found it fascinating that you're marketing the cash advance, but in conjunction with this high yield savings account. I think you explained it earlier on, which was it's the wave of highs and lows in terms of throughout the year. But if you don't mind just humoring me on that seemingly diabolically opposed concepts, but marking them together in one way.
Absolutely. And it's good that I know you said you were at Chime. I spent some time at Varo myself. And so I saw a lot of the same kind of customer base there. What we found is that those users are actually okay at saving, but they tend to save for much shorter time horizons. And so like they might be saving up now because they know that things are going to be a little bit tougher in a few months. One of the books I always recommend is the book, The Financial Diaries. It came from this U.S. Financial Diaries initiative where they looked at a couple hundred families who are low and moderate income in a few different geos in the U.S. And they watched all of their inflows and outflows of cash for a year and did a lot of interviews. And the book has got some just fantastic anecdotes. They've got lots of great data. So I'm a huge fan. And so their observation of the volatility was one of the things that I was thinking about a lot here. But they did say that people have different ways of saving. They had an example of someone who, when they had extra money, they went out and bought like really staple, like basic goods, like, canned foods or toothpaste or things like that, so that they're basically pre-committing to spending their money on really responsible things. So like this just tells me that people are craving, something that really helps them deal with this challenge, and they're willing to, use their pantry as a savings account, basically. And so like, when I think about this, I think, okay, well, how can we provide a savings account so that they can make the most of their savings for however long they can do it? And maybe that's only a month or 3 months or something. That's already interest that they're earning that they wouldn't have been earning. So that was a lot of it. Now, if I took a snapshot right now, I don't have it in front of me, but like, if you had to ask me like how many people actually are saving money right now, I would expect it's probably a minority of users if I take a snapshot at any one time. But if you look over the course of a year, I do expect that to kind of ebb and flow around, let's say, the holidays or around like seasonal work sorts of periods. And so like, that's the way we designed it, to be there for those moments when they actually do have the cash and they want to make something out of it.
Yeah, I would imagine March is going to be a good month for you in the coming years.
Yeah, I mean, one of the things, even, looking back at Varo, like tax refund season, all of a sudden, like, wow, this all hits all at once, right? And so a lot of people file it's like in February it hits, and they see that right away. So yeah, I think I expect to see a lot of like seasonality and different people kind of using that when they can.
Yeah, it's funny. It's a surging moment. Like March is when secured cards and folks in that category tend to surge because folks have liquidity normally that they don't have during the rest of the year. But I've been talking to some providers in like the low dollar loan space who are actually seeing a major headwind this year because the liquidity level. And I'm not an expert here, but I've heard that some changes in the tax law have made it such people are getting extra large returns this year. And it's actually drying up demand for low dollar loans. Folks in the industry think it's going to pick up again and call it April, May. But it's an unusually slow season, but it might be seasonally strong for you guys. Let's pivot. I'm curious, the multi-product construct, how does that play out for a customer that's applying for your product? Are they filling out one application, two, three? Is it just one streamlined thing where I get all four products at once? Can you talk us through that?
Sure, it's a great question. So if you go through our funnel, you'll do a single application that gets you two products initially. One is the checking account called Boost Money Spend, and the other is the card. So you start out with that. Once you log in, there's like a one-click thing if you want to add the savings account. It's optional, so you can add it, but we don't. There is an application, but it's all pre-filled, and so you just click and you say yes, I approve. So that's easy. When it comes to the Boost cash advances, we don't have to do any more like CIP, like, asking user data, verifying identity. Like that's already done. That's one of the advantages of having like that deposit account that sticks around, because that's like, we can kind of hang our verification on that. So by the time you get to getting a cash advance, we're just asking you, like, the first time you do have to connect your bank account, or if you have direct deposit with us already, then that's great. We also, one thing I didn't mention is we work with a direct deposit switching vendor, Argyle. So like you can switch your direct deposit to us directly in the flow if you want to do that. And so like once you've identified that and you pick which account you want to do it from, then you're just telling us the amount and we figuring out the due date, and that's about it. So there is a separate funnel for Boost Cash, but it's not doing all the identity stuff. It's just like, okay, what account's it from and how much and so on.
One of the interesting things, again, reading the terms, maybe call me a nerd, but there's like a handful of states that Boost Cash is not available in. Are you able to share just like the product experience and like why that's the case? And like,
absolutely. So, and I think if you look at other cash advance providers, you see a similar story that like the legal framework around cash advances is a super complicated and messy reality. One thing that makes us a little bit different from some of the other providers is that our cash advances are truly a legal loan. If you look at a lot of providers, Dave, Bridget, Earnin, and so on, Moneyline, I think as well. Those are just EWA, and so in fact, there's no recourse if the user doesn't pay it back, right? I mean, they won't give you another advance after that, but there's no like legal construct around it. That's one option. The benefit of it is you get a little less federal regulation. But frankly, like we do loans all day, every day. And so for us to make this a loan was a really straightforward thing to do. That simplified our situation a little bit in the sense that by working with a sponsor bank, we get some of their, preemption benefits and so on. But there are still a number of states that have particular laws in this space. Most of the states on that list, we should be able to get eventually. There's a couple of features we need to add or some like agreement review. There's one state we should be turning on even in the next couple of weeks.
And what about, does that change how you think about marketing to these consumers? How does that influence that, if at all?
It hasn't too much. I mean, so far the marketing we've been doing has been pretty broad. Of course, that does mean that some users come into the funnel and we have to kind of disappoint them and say like, hey, sorry, we don't do that. But we've decided to put all of the constraints kind of right there on the funnel before the user gets the Boost Money Spend account even. So at least we don't want them to get halfway into this and get parts of the product and then have to say, oh, no, you can't get that. So, if we're going to disappoint some users, we're just trying to do it early. So it hasn't had too big an impact on our marketing so far.
John, I noticed as we wrap up here, I'm noticing we're close to time, and you may have a meeting, and I don't want to make you late for that meeting. But I did notice you were at Lending Club in like the 2016, 20 to 18 era, and then you joined Upgrade in 2021. So I'm guessing you worked with Renaud in both of those tours.
I did.
I'm curious, what's that been like? What's that been like working with him across this whole journey?
It's a great question. I've had some incredible career experiences thanks to Renaud and the teams that he's built out, and so I've always been kind of grateful to him. I think he's an amazing entrepreneur. He has a very kind of entrepreneurial brain that's kind of unlike a lot of others, and he also kind of sees the long view, which I've always really appreciated. So it gives a lot of us space to come up with these kind of crazy products and try to make them a reality, make them successful. I think that even when I was trying Upgrade, I got to have lunch with him, and he talked a little bit about how his thinking was different from Lending Club, and that was kind of useful for me. He was thinking a lot about having multiple products, earlier on in the company, and how, if you go all in on one product and you try to add another one, it's very hard to get it the oxygen and the resources it needs to be successful. But also making sure that the products we offer are targeting the same kind of customer, um, so that like, you have a certain marketing engine and you'll be able to use that for all those things and be able to tell users like, hey, we got you covered for all these different kind of needs through different stages of your life. So I think he'd become a little bit more reflective on how to build the business effectively. But I think the through line has still been, he's got a really nice combination of a good vision that's not like, decades in the future, but is, future oriented enough to be inspiring. Like it's a really nice balance, I find. So yeah, it's been great to be back at another company that he's founded.
Well, that's awesome. Well, I appreciate you coming in and telling us about the Boost Money product. This was a great conversation. It's something we'll be following here in our newsletter. So we'd love to invite you back maybe in 6 months or a year as we learn more and you have more insights on how consumers are reacting to it.
Well, that would be great. And I appreciate all your questions. I'm so glad that you asked me to join. And yeah, I'm sure we'll have learned a lot in 6 months or a year, and things may look different then. But yeah, look forward to it.
Yeah, John, this is great. And shameless plug, we're going to have a conference in around September in SF, and we'll love to have you join, and maybe we can expand this in a big way. So
I think that'd be great. I would look forward to it.
All right. More details coming for folks on the toaster. But yeah, Nick, you're just dropping the little teasers here and there, aren't you?
I mean, we learned something about marketing, right? We're literally right about fintech marketing. Like, I hope there's some principles we can apply here. And this is like one of the principles. So go for it.
Yeah, no, that's awesome. Thank you, John.
Great.
Talk soon.
Thanks, you guys.